This video is one you don't want to miss. Bitcoin pumped up last night, but it's repeating a pattern that we saw at the bottom, the collapse from the FTX low. This is something that I put out on the channel just yesterday, looking at the possibility of the low pattern forming once again. So don't go anywhere, guys. We've got to get through how this low is forming, the rejections and the support levels that we've been covering on the channel, looking out for warning signals for how this move is progressing. Plus, I've also got a special update for you. July 13th, coming up to 2 months ago, looking at missed opportunities in price targets to the downside. I got all of that to get through, plus the SP 500, the NASDAQ, and a quick look at other markets around the world to give us an idea on how these crypto and Bitcoin markets are unfolding during 2023. Make sure you smash up that like button, subscribe to the channel. This is your home of macro cycle analysis. We study the past to forecast the future. Now, I've also got a special at the moment going on for TIA Premium. If you want to get in on that special, be part of the TIA Premium members who are crushing their trading game. 200%, 100% here, 66%. And these guys putting in a nice 40 and 350%. Then check out the link, top of the video description, subscribe to the email newsletter. It looks exactly like this, first name, email, and we'll be sending out the discount code in the coming 48 hours. So don't go anywhere. If you haven't received that already, definitely do that now. Link is in the top of the video description. This is where we go through on a regular basis with all of our members to help everyone improve their trading and long-term investing. All right, guys, let's take a look at the first thing for the S&P 500. We have looked at the low coming in for August on the S&P 500, referencing many data points, but bringing it all back to something nice and simple. We said single digit to the downside for the S&P 500. Meanwhile, most media analysts, they are calling for big corrections at this point. We had several days down. The extreme fear came in at mid-August. So we had a big day down, 15th, 16th, 17th, and then a reversal here on the 18th. Remember that going forward. This was the big fear. Those big players are talking about levels under 4,000, under 3,800, and under the cycle low at 3,500 points. What we're seeing in the market, we just focus on the data, which is potentially why you like the channel and you subscribe to it. The data is not telling us that. So the smart money is doing something else. And that's what we do here, is just read the chart for what it is. And we don't get involved in all of the fundamentals, because that typically sways people from what is actually going on in the market, like they've been known before to be the funny mentals. It's important to understand what's going on out there, but it's not something that is necessary in the trading strategy moving forward. The market gave us a higher low, and now we have the 50% level to contend with right here. So yesterday's bar was absolutely incredible, punching through, taking out that 50% level. Now, some of the news that I heard is unreal. Bad news is now turning into good news in the market. This is exactly, this is what we've been pointing out for a while now. What happens in bull markets? Remember that. If you are unsure how these economic news pieces and other information and data that potentially is bad for the market, because logically speaking, we had a lot of bad news through the last 8, 9, even longer months, but I'm talking from the cycle low here in October, which we talked about specifically on the channel here, calling that low there for October based on much data. You can see those videos. You can see now why this bad news is turning into good news in the market. It's because it's a bull market, and it's becoming a little bit more evident for more and more people just as we see the prices continue up. Now, is that it? Is that the end of the bottom? We're not sure yet. Remember, we have been looking at the possibility of August, September, October trending sideways. Remember that years that were up 10% at the midpoint tended to consolidate around here. So since the beginning of the year, we are up 15, 20% or so from the beginning of the year. From the cycle bottom, it's a lot more. So many have missed out on a lot of gains, and they were buying up at the peak. Don't forget that. They were getting quite excited up here, and we have to wash some of those out with a single digit correction, as we have pointed out. Now we need to go through a consolidation period before later in the year, probably, I mean, there's no guarantees, but probably going up. And so far, the market has basically told us what it wants to do, and we're just reading what the data is telling us, and it seems like it's working out relatively well in this case. That is good news for BTC moving forward. We need to get through this consolidation period with not too much downside for Bitcoin. And so far, so good. We see another good green up day. Like I said, it's not confirmed yet, but at least it's above the 50% level at around 4,500 points. We want multiple days above here and some more consolidation. Remember, the upper side of the 50% is strong. The underside of the 50% is weak. So let's have a look at the longer term play on the SP 500 as well. You can see for the weekly chart here, we are still sitting in the strong half overall. So that's above, at this 50%, above 4,300 points. And the weaker part is going to be under here at 43 to 4,000. Now, if we take the overall range, the bear market range, that is, the weaker part is under 41.55. And you're probably wondering, well, how are there so many 50%? Well, it's because we have so many different time frames. The bigger the time frame, the more important those levels are. So this is the most important level right now, 41.55. These levels are going to give you shorter term moves. So if we break down in that shorter term 50% here, then it's potentially just going to be shorter term moves to test the lower prices. But providing we stay above the overall move here at 43, then it can basically do what it wants for the longer term. The shorter term, different story, but that is where most people get caught up in the day-to-day news. There's bad news coming out, there's good news coming out, the market's up 2%, down 4%. They get caught up, but then they forget to look at the overall picture. Now, if I was better with my analogies, I could give you something better here, but essentially we're just looking at little battles on the war field. The little battles here day to day on the 4-hourly or the daily chart aren't as important as what's happening on the bigger stage here, the overall war. And the game is to the upside here. And basically the market is telling us there is far more upside. But right now we need to go through a few little battles here, the short-term stuff. And that's essentially what's happening. We're above these major 50% levels, hitting up some battles on the very small short-term charts. All right, we're above this nice 50% level at 41.55. And we can scroll out to an even bigger stage here. This is the overall stage looking from the COVID crash low in March to the all-time high peak in January 2022, down to the low in October 2022. The market hit dead on that macro 50% level. You can see right there, 50%, still in the strong half and the weak half here as we look to the macro. Everything is still well and truly on track, and we're only fighting battles in a very, very small short-term time frame for the overall picture here, well and truly up the top in the major strong half of the chart. As for the Nasdaq, it's doing the same thing that the S&P is doing, so I'm not going to cover it in greater detail because it's essentially almost the same sort of chart, except there are bigger moves to the upside and to the downside. We know that from the cycle low of October that we've talked about many times, and that March bottom, the banking crisis low, we've seen very significant gains. That one there is about 50% to the upside, going from 10,500 to 16,000 points. That's the Nasdaq taking right off. Now the Nasdaq is still in the strong half of the 50% level here on the weekly chart, so that slightly bigger time frame than the daily, and just yesterday it closed above the 50% level on the daily here as well. Now a really interesting point about these lows that happened on the Nasdaq and on the SP 500 on the 18th of August is when we look at the McClellan oscillator. When this thing goes from negative 50 and bounces above that level, what happens is within about 15 days of this, the market bottoms about 72% of the time. Now, Seth's posted this. If you haven't followed him on Twitter, I suggest you do. He has gold content over there, part of his name, right? But the majority of people are telling us markets are going to crash, and of course they are not. So the market typically bottoms when this oscillator goes from the negative and bounces back past negative 50 again, like it's done right now. It bottoms within those time frames. Within 5 days, about 50% of the time. So not high enough to really take a good reading from, but within 15 days, 7 out of 10 times the market bottoms. And pretty much it's what's happened yet again. So you can go back through this McClellan oscillator if you want to for yourself. I don't want to make these videos go for too long, but you can see it happen almost every single time. Here is a low and then bounce. Remember, we are in a bull market now. This was a bear market, but nonetheless, you still get those bottoms in the market. They're just not going to be as strong when they're in a bear market. unlike what we're in now, where we're in the bull market. So now it is a buy the dip. It's a buy the dip opportunity. But of course, masses are telling us that this was a time that the market had to collapse further. So this is all helping us for our Bitcoin analysis. What's happened in the last 24 hours? Well, the Grayscale's won the case against the SEC, which potentially means we're going to get some sort of spot Bitcoin ETF today, tomorrow, a year from now. Who really knows? But what the market has done is got very, very excited leading into that piece of news. It's sitting at 50%, $27,700. The day closed almost dead on that level. It was $11 out from the 50%. This is how powerful the 50% levels are and why I've got a caution or a warning around the 50% levels. This is very similar to what happened at the low, and this is what I covered in yesterday's video. Bitcoin is repeating the bear market collapse. Will it get worse this time? And with the data is suggesting that it's not going to get worse than what we saw there. It's unlikely we're going to go back past 15.5K, unlikely that we're going to consolidate under that 19.5K, as I've pointed out in this particular video, going all the way back to July when we were at those peaks of the market, looking at the possibility of Bitcoin never returning to some of these prices. So I've given you the link, or the title here, I should say, and the area in the video to go and have a look at if you want to remember these points. 24, 25K is still a possibility to go back and revisit and potentially break through because we have not gone past $32,000. That's what has been said in this particular video on July 13th. That's what we talked about at the time, looking at missed opportunities in the market, which is why we still see big calls to the downside. Many people are calling for bigger and bigger prices, but I still believe that these are missed opportunities under here. And as I pointed out in the video, I doubt we will see $28,000 once the market breaks 32, and depending on how high up the market reaches for that next target. Now that's a little way off. We still have to get through some of these shorter term points and look at how this pattern is potentially repeating more or less. Not exactly, but it looks quite similar. So we have a pump up here. We have a few days to grind out, and then we saw a pump up. We were looking at the possibility of a retest of the low. Potentially, this red day here was the retest of the low on the 22nd of August. We still might have another opportunity at that low if Bitcoin can't close above this next 50% level. So that's our big warning right now, $27,700. It is weak under this level, short term, and it is strong if we get back above it. Now that's just a short-term look at BTC because it's basically that first range to the collapse, or basically the collapse range from August. Now, using this entire range, if this is the low for this period going down, of course, the next 50% is at 28,500, which also lines up very, very well with previous support levels going back to the 1st of August. So that would then become the strong on the longer term time frame. We've got our 4-hour here, we've got our daily, and then we have to look back to the weekly as well. So the first level, as we pointed out, or as I pointed out on Twitter yesterday, if you're not following, links are in that video description as well. Scroll down, you've got it there, Twitter and Instagram. Then we start to look to retest some of these previous top levels here at about 26,500 and potentially back into that $26,000 zone as well. Now, how does that look compared to the cycle bottom? Interestingly enough, the low to this high here, guess what? Market tested 50% again and got rejected, but it put in a higher low, higher low, higher low, and then pumped. The difference now is the time frame in which it's happening. This has happened a lot faster, the move down, the test, and the move up, even though it feels like a lifetime, whereas back here at the FTX collapse low, that was approximately 2 months. So if we use the date of November 8th, 9th, where that low happened, and then look at the entire period until the breakouts and the tests, it's spanning somewhere around, to this low here is 51 days, all the way out to 58 days, and then the breakout of the top here and the 50% level is 64 days. Whereas what we're currently seeing for BTC, we have the low to the test, potentially, this is the retest of the low. It's not confirmed yet, we need to get some higher closes first. We have 5 days. Then to the breakout of this little test here, we have 12 days. So potentially it's happening a little bit faster, but we just need to wait on those confirmations, especially above our first level of $27,700. So just looking at that there. And then if we take this one back past to the top, that's going to be at 28,500. So that's what's happening right now. Maybe we're going through this in terms of that grind sideways period, which is a rough period for a lot of traders, because you think it's happening and then it doesn't. And that is where a lot of people think the market is going to collapse further, but it doesn't. So let's keep that on the chart. Now, looking at the overall picture, we've gone through the 4-hour, we've gone through the daily. Let's take it back to the monthly in this case, looking from the cycle low to currently the first bull market rally from the low. Now, I'm calling it the bull market because I don't believe the price is going to break past that low again. That's why it's the start of the bull market. They have different feelings. The start of the bull market is pretty much everyone still thinks it's a bear market. Think about the top in the bull market. No one thinks that that is going to be the start of the bear market. The top of the market is the start of the bear market. And you come all the way down, breaking some significant levels, and then this is still what is feeling like the bull market is going to continue. However, technically speaking, it's going to be the top of the market and it's going to be the bear market because we start to break some significant levels. That's what's happening right now, at least as my belief from the analysis that I'm taking from the market. On that possible test to the downside, that would then take out our monthly swing bottom. So we would then at least test one of the monthly swing bottoms in this move to the upside. So it's not a bad thing because we do want to test how strong the structure is and how strong the support is. So that's not a bad thing, 24,750. If it holds, we get some closes above it, then guess what? We're working in the strong half of the 50% level. And that's why, again, I've got that warning out that this is going to be a key level moving forward. And we have a few of the shorter term time frame 50% levels to keep a watch on so that we know what can happen in the coming days, weeks, and also months. So they're the 3 levels we're looking at over the coming days, weeks, and months. Don't go anywhere, like and subscribe, and if you want to get on board with TIA Premium while the sale is on, link is in the top of that video description. Thanks once again, guys. I'll see you at the next video from Nice, France. I hope you're having a great day, and I'll catch you again very soon. Peace out. Mum's not here. Can you close it, please? What are you saying? Okay, bye.